Welcome to the participant overview of coverage for your group long-term care insurance. I'm Katherine Johnson from Lighthouse Group. Today we're going to review your group long-term care insurance. We'll discuss what long-term care insurance is and give you information on your benefit choices and how to enroll. Long-term care insurance offers you financial protection if you are disabled and unable to perform 2 of 6 activities of daily living, what we call ADLs. They include bathing, dressing, toileting, transferring, continence, eating, or you could be cognitively impaired and still qualify for the benefit. This is different than long-term disability insurance. Long-term disability protects your income while you are disabled. Long-term care insurance provides you a benefit to help pay for the cost of taking care of you while you are disabled. The Unum long-term care insurance is paid for and provided by the firm for each employee. The base plan, which is a $1,000 benefit for up to a 3-year duration, is covered in full by the firm. On top of that, you have the opportunity to buy up on your benefit. You can add additional monthly benefit up to $6,000 per month. You can buy a longer duration of 6 years. You can add a simple interest rider. You can add an accelerated payment option rider as well. If you're newly eligible, meaning you were hired in the prior calendar year or plan year, or you are newly eligible due to becoming full-time or joining the firm, this is your guarantee issue opportunity. That means as an employee, you can purchase the full buy-up, $6,000 benefit, 6-year duration, and all of the riders on a guarantee issue basis. No medical questions are necessary. If you decide to enroll in the future, medical questions are required for coverage. This benefit is offered at group rates and is substantially less expensive than anything that you can find individually in the market. The need for long-term care is quite extensive. The facts and figures shown here show that an estimated 10 million Americans are currently needing long-term care. And the probability that we'll face a time when we need a nursing home stay or long-term care is better than the probability of disability or the probability of premature death while we're employed. Even more people need long-term care services in a home rather than a nursing care setting. Who needs long-term care? We often think of the elderly as the individuals needing long-term care, but it can really be anyone at any age. The leading causes of long-term care claims include cancer, trauma, like an accident, a stroke, or a neurological disease. And the age of individuals needing long-term care is across the board. 43% are older than 65, which is the traditional group that we feel would be eligible for long-term care, but 42% are between 46 and 65, and even 15% are younger than age 45. This slide shows the current long-term care cost in the market. This is based upon a 2018 Genworth cost of care survey. So in 2020, I would expect that these costs are even a bit higher. The average cost of care in your home, and these are monthly, is about $4,000 if you need someone to be in your home taking care of you, like cooking, cleaning. But if you need a home health aide, that's even a little bit higher than $4,000 a month. An assisted living facility, approximately $4,000 a month. An adult daycare, about $1,500 a month, and full nursing care runs between $7,000 and $9,000 depending upon how much care you need. The kind of long-term care coverage you need depends upon the amount of loss of those ADLs that we mentioned. Home care could be appropriate if you just need help with simple tasks such as dressing or bathing, but professional care might be needed if you need more assistance, such as transferring from bed to chair, including dressing and bathing. As the ADLs increase, the amount of care that you need increases up to the point where you would need most of your daily living activities help, assistance with bathing, dressing, transferring, toileting, incontinence, and feeding. There's a lot of misinformation considering long-term care and who's responsible for covering the cost of it. Often we feel that Medicare or Medicaid or our health insurance or long-term disability will cover our long-term care expenses, and this is not true. Medicare pays a tiny portion of nursing home costs. The amount of days it covers is limited, and it's for a limited time after a hospital stay. Medicaid only pays for long-term care insurance after all of your personal assets have been depleted down to the poverty level. When Medicaid is paying for long-term care, there is a limited choice in where you can have your care and by whom the care is provided. Lastly, our disability, long-term disability, and medical coverage does not cover long-term care expenses. Medical insurance generally covers diagnostic and treatment costs. It does not pay for ongoing care, such as custodial care. We often think that we'll be able to easily afford long-term care expenses. The facts are that most of us don't have a nest egg at retirement that would last us long when semi-private nursing care is so expensive. Personal savings are at an all-time low, and it is projected that long-term care costs will continue to rise and outpace the rate of inflation and definitely outpace the rate of our savings. That's why this insurance is a great opportunity for you to protect yourself and your family members from future substantial expenses. A long-term care facility definition would include the following: assisted living, Alzheimer's and residential care facilities, rehabilitation centers, and hospice care. Long-term care insurance gives you a little bit more control over where you have your care. A lot of people prefer to stay in their own homes or their own communities and choose your caregiver if possible. That would include potentially a family member or a friend. Home care is heavily utilized. Most people that are younger than 65 prefer to stay in their home if at all possible. 72% of claimants younger than 65 receive their care at home versus a facility. This long-term care insurance gives you the choice of having your care provided in a facility or at home. Professional home care would be care that's provided in your home by a licensed home health care agency. As mentioned, it is included in this long-term care plan. You don't have to be in a facility to receive the benefit. As long as you qualify by losing those ADLs that we mentioned earlier in the show, you would be eligible to receive your full benefit even if you are receiving your care at home. The facility benefit is 100% payable to you even if you're having your care at home. To qualify for home care, you need 1 hour of care each week in order to have 1 full day of payment. Other standard benefits that are included in the long-term care policy include respite care. This allows a short-term or periodic care break to your caregiver and allows for another home care facility to provide your service or to have a facility service provide your care when your caretaker is taking a break. Bed reservation is always included. This would apply if you were in a facility and needed to go into the hospital. Oftentimes, waiting times to get into a facility are so extravagant that your bed is forfeited in the event you have to go inpatient at the hospital. This continues the payment to your facility to keep your bed available for you when you return. And waiver of premium. If you're on claim and receiving the benefit, you have no payment due for your premium. This plan is completely portable and you can continue the coverage even if you leave the firm. There's contingent and non-forfeiture options. If Unum has a rate increase, the premium that you've paid in the past can be applied to a paid up benefit for the future. And you also have international benefits. If you're outside of the US, you can continue your long-term care payment at 75% even if you're outside the country. The Miller-Johnson Long-Term Care Plan provides you the base benefit at no cost. And this is also not taxable to you. You qualify for the benefit if you are disabled for 90 days. The monthly benefit is $1,000 a month up to $12,000 per year. And the benefit duration is 3 years. This pays you whether you are at home receiving care or in a facility. There is no pre-existing condition clause, and you have non-payment of premium protection. This means that if you were disabled or in a facility and your payment lapses due to non-payment, it will protect you in the event that occurs. Your buy-up choices are noted here. The base plan, as we mentioned, is a $1,000 monthly benefit in a 3-year duration. You can buy up on your monthly benefit in $1,000 increments up to $6,000 per month, and you can buy up on your duration to 6 years. You then can choose from Plan 2, Plan 3, or Plan 4. Plan 2 includes a simple inflation rider. This adds a 5% inflation each year that you are insured. Plan 3 is an accelerated payment option. This allows you to pay a little bit extra on your premium each month and be done paying at the age of 65 or after 10 years, whichever comes first. Plan 4 includes both the simple inflation and the advanced pay option. The younger you buy your long-term care, the better and the lower the premium. Here's an example of buying the coverage at age 40 versus age 55. If you purchased at age 40 and paid through age 80, you would pay a total premium of $29,520. If you purchased the coverage at age 55 and paid through age 80, 25 years of premium payment, you would end up paying $39,600. The difference in cost is substantial. Reminder that this is the only opportunity that you have to purchase guarantee issue coverage. This applies to new enrollees that were hired in the last year or newly eligible employees who have just joined the firm or just became full-time eligible. And remember that this plan is completely portable. If you leave the firm and continue your coverage, you will simply be billed at home versus having a payroll deduction to cover the cost of your plan. And this includes the Miller-Johnson Core Plan as well. Here's some cost examples for age 40. Plan 1, $3,000 monthly benefit with a buy up to the 6-year duration would cost approximately $6.18 biweekly out of your check. Plan 2, which is the simple interest, increases your costs but continues to grow your benefit each year that you keep the plan. This is $26.36 biweekly. The accelerated payment option would be approximately $15.73 biweekly, and if you enrolled for Plan 4, which includes the simple interest and the accelerated payment, costs are approximately $59.07 biweekly. You can choose what benefit fits your budget and your long-term care plan's for you and your family members. You may also enroll your spouse, parents, grandparents, siblings, in-laws, children, stepchildren. There's no deadline for enrolling for those who need medical evidence. Your spouse needs medical evidence in order to apply, and any family member needs medical evidence in order to apply. Your spouse's coverage can also be payroll deducted. However, family members who enroll will receive a direct bill at home for their coverage. There's a great website available to you, www.unuminfo.com/Miller Johnson. This allows you to review plans, coverage, and even includes a rate calculator so that you can determine your costs and look at different options that fit your budget. The cost calculator is easy to use. You can pick your pay frequency, whether you're paid biweekly or monthly. You can switch between the calculator for employee coverage, which includes the Miller Johnson funded base plan, or switch to a family calculator, which you pay the premium for in full, or your family member pays the premium in full. You pick your age category, your duration, 3 or 6 year, the amount of monthly benefit that you want between $1,000 and $6,000, and then you can pick your buy-up options, including the inflation or the advanced pay option. Your employee cost would be displayed on the screen for you to determine whether you'd like to enroll or not. Enrollment forms are also included at the website, and all of your coverage documents, including your plan information, summary of benefits, and legal notices. The premium that you pay out of your paycheck for this benefit is post-tax and can be payroll deducted for your benefit and for your spouse if you choose to enroll a spouse. Again, other family member coverage, whether you enroll for a parent, a child, a sibling, that is not payroll deducted and will be direct billed to your family member at home. In summary, long-term care insurance is a great opportunity for you to avoid physical and financial dependence on family members. This is the leading reason that people purchase long-term care. You can preserve your hard-earned assets. You don't have to spend down your assets to qualify for Medicaid, and it allows you choice on where you can have your care, whether it be at home or in a facility. If you have any questions about long-term care or want to talk through your options, I encourage you to contact me directly at kjohnson@lighthousegroup.net or by phone at 202-7003. You can contact Unum directly if you wish, but I highly encourage you to take advantage of the unuminfo.com website for Miller Johnson. Thank you.